Welcome everybody to this week's Trustee Tip. I'm here with Tina Rioux, a mortgage agent, and we're going to be talking about sort of the changes in the environment with the rising interest rates and how mortgages affect people and consumer proposals affect mortgages, and of course what we can each do to help you out. As usual, I'm Josh, the licensed insolvency trustee from Harrison Partners. And we are available across Canada in every province except Quebec to help with insolvency and other matters, and connecting you with the people that will be able to help you to make sure your finances are on track. So thank you so much for joining us today, Tina. It's great to see you. For those of you that don't know, Tina and I are good friends as well, so this is always nice to catch up with a friend. Tina, why don't you just start by telling us a little bit about yourself and your career, and where you're at and sort of where you're licensed and things like that.
Absolutely. So I have been in the lending industry, I'm going to say, for almost a decade now, in varying spaces. I started off in the legal field, and then I went into private lending and financial tech, actually. And it gave me a pretty varied background working with people who are prime candidates with an abundance of investments, income, equity, whatever that may be, all the way to people who are in unfortunate situations where they do unfortunately have to file an insolvency due to unfortunate circumstances, divorce, loss of job, whatever that may be. As we all know, these things do happen. That's why there's people like Josh and myself to help you get out of these situations. But in dealing with the variance of people, it's really given me the opportunity to learn so much about every single stage of what can potentially happen to somebody, which I think has really given me a great edge in what I do, because I understand all aspects of it, which has brought me to becoming a broker and really fine-tuning my solutions based off of the person's specific needs. When you go to a bank, it's more one size fits all. They'll just say, hey, this is the home that I'm purchasing, this is how much it costs, this is my income, and they'll just give it to you. Whereas I work quite closely with my clients to figure out what their immediate financial goals are, and more long-term as well. So that's sort of how I got to where I am and what I do. I could go on and on about different opportunities I've had for my clients, but really the bottom line is I work with people to figure out how we can achieve their financial goals, whatever they may be.
Awesome. So you work with various different types of lenders. I think they're called like A, B, C. Is that correct?
Correct. So I work for IMI Financial Group. We are licensed under the Dominion Lending umbrella. So that gives us access to a multitude of different lenders, varying from A side, like traditional banks, TD, Scotiabank, institutions like that, to alternative and monoline lenders, which are able to offer A side rates. However, they do have a little bit looser lending guidelines when it comes to self-employed income, stated income, things like that, bruised credit, people who have been in a consumer proposal or whatever that may be. Depending on the file, I have to go to bat for my clients to these lenders and really explain sort of the situation. And then they will still have an opportunity to get a bank an A-side rate, usually, depending on the situation, all the way to private lenders who are essentially 100% equity based.
Awesome. So obviously that brings us full circle why we're here. So a lot of our clients will file a consumer proposal and then seek a mortgage. You mentioned that you have worked with clients like this in the past to help them get out of the proposal, but also to refinance their home, possibly get some money for a renovation or something like that, right?
Absolutely.
Cool. Yeah. So, I mean, obviously we're seeing rising interest rates right now, which I predict won't stop anytime too soon, unfortunately for all of us, including myself. And how are you sort of seeing this affect both the number of clients and the type of client that comes in, but also the other side of it with the ability to obtain the lending?
So it's tightened up across the board, obviously. Lenders have to mitigate their risk as much as they possibly can. And when it does come to these alternative lenders, they are able to lend to people who have, the challenging files. But they've really, and even private lenders as well, they've scaled back quite a bit, and they're a lot more reserved. And it really has to make sense. It's about the marketability of the home for the most part, and obviously in alternative spaces, the file of the person who is applying, but they're getting a lot tighter. So that's what I myself am able to go to bat for my clients. It's not something that they can do themselves. I have to really, make it make sense to my lenders, because they are most definitely being a lot more reserved in their lending. Rates obviously have gone up. I wish I had a crystal ball to see what is going to happen in a year from now. One thing that I have noticed is people who waited. I have so many clients who say, oh, I'm just going to see what the market does. I'm just going to see what the market does. And now it's been a year since the last time we spoke. And I said, hey, remember when we spoke last year and, you were coughing at a 3% interest rate? Well, now it's looking more like 6 or 7%. So there's a lot of people that are pinching themselves and saying, oh, I should have done this last year. And then there's other people who are saying, oh, well, now I'm going to wait. But realistically, when it comes to somebody who's looking to consolidate debt, or something along those lines, like utilize the equity that they have in their home now, I think that now is probably the best time to do it, because we don't know what the market's going to do. Rates have been going up quite consistently, and just as you said, I don't really foresee them stopping anytime soon. And in comparison to a 19.9 or 24.9 credit card rate, you would rather be paying the rates that are being offered right now to consolidate versus having to pay those higher rates on your card. So I just have to really make it make sense for my clients, but the market is definitely changing.
Yeah.
I think that one thing that people don't really understand is these rates that we're seeing now they're happening for a reason. The market's essentially evening itself out, right? These rates of 1.49 or 2.49, those are the rates that were sort of abnormal. And obviously, because of the pandemic and the situation the market was in at that time, those were the rates that were offered that people are like, oh, these are great. But those are not normal rates. The rates that we're seeing now are more normal and more stable, just based on, economic history. But there's no real end in sight for them to go down anytime soon. So I think that it's a big shock to people for sure.
Absolutely. And I certainly in Toronto, where I'm located, we're seeing equity drop as well. And, opportunities to refinance and things like that are getting a little bit harder. But on the other side of that, as equity goes down a little bit and people's eligibility for mortgages reduces, that's where the licensed insolvency trustee like myself and my firm is always available to help people consolidate their debt through a consumer proposal. And of course, the less the equity is, the better the discount on their debt will be, with the no interest and no penalties. So it's sort of a nice business to work together, mortgage refinancing and licensed insolvency trustees, because oftentimes it'll go from one to the other or vice versa as the market sort of changes. We're always sort of working in tandem together, which is really nice for our clients. And I think what's really interesting for me and for most of my clients that own homes is they may have been ineligible for a mortgage prior to filing the proposal, because they've got this credit report with all kinds of scars and marks on it that they can't really get rid of, and they come to us. We file them a consumer proposal, even if it just is that 100 cents on the dollar. It's just sort of like getting everything organized. We clear off their credit. We speak with someone like yourself, Tina. We introduce you maybe 2, 3, 6 months into a proposal, 1 year into a proposal, refinance them out, And of course, because the amortization rate on a mortgage is so much longer than a consumer proposal, it reduces that payment back down to something that's tolerable for them. So it's a
Exactly.
really, yeah, it's a really good business in tandem. And would you say that I'm sort of like on the right track when it comes to someone that's got a credit report that just is super messy, that the route, if they can't get approved for a mortgage, is to come to a trustee, or is there a way for you to sort of mitigate that in a different way?
Absolutely. So one thing that I do for my clients, and it's not typical for brokers or traditional banks, is I do a full financial assessment with them, regardless if they are going to be eligible for a refinance or not. And that gives them a good idea of, you know, what steps they need to take to get to where they are. And sometimes, unfortunately, there's not really any other option for them to refinance. So they do have to go to a licensed insolvency trustee. And I explain, what that can do for them and what that looks like. And essentially, you're just packaging everything up, because the debt's not going to go anywhere until you address it, right? And when you're consistently paying your minimum payments, you're going to be paying that debt for the rest of your life. I'm not sure if most people know this or not, but if you look on your credit card statement, it'll tell you, if you pay your minimum payment, it will take you however many years to pay this off. And I've had some of my clients, and their statement says it's going to take 76 years or something along those lines.
Yeah, what a crazy thing the government made them do. I mean, it's good so that people can see that, but like I've seen, 200 years, and it's like,
Yeah.
200 years at $20 a month. Good luck,
Well, and that's
So
the thing,
absolutely.
right? People just don't think about it. And, especially homeowners, they think that they have, oh, well, we have our home, this is an investment and things like that. But then when we get into the nitty gritty of going through their credit bureau, and I can see, hey, you missed payments at this point, and you missed payments at this point, what happened? And then I can go to the lenders and I can give them explanations as to why they see this. But sometimes it is best for them to consolidate everything, go into a proposal, and I say, hey, in 6 months from now, as long as you've been paying your payments on time, we can see what your credit file looks like, B, what the market is doing, if you're going to be eligible for a refinance, or depending on the equity that you have, maybe it increases, maybe it doesn't, who knows? Again, no crystal ball, but it's really good to have that financial assessment, and will determine which route we can go. Once the consumer proposal is filed, as long as there's equity, because we have access to this multitude of different lenders, the opportunities are really endless, as long as the equity is there, right? It's a lot of make sense kind of lending for the most part. If I go to my lenders with a solution, and an idea of what this is going to look like for this client, regardless of if there's a consumer proposal on file or not, we can usually make something happen. So, people have this negative connotation with a consumer proposal, but sometimes it's really the best option for people. And I have no problem communicating that to my client. I mean, there's not a whole heck of a lot that I can really go into when I'm speaking to them, because I'm not a licensed insolvency trustee. But of course, that's where you come in. And I can let them know what life's going to look like for them after, once they have filed a proposal. So it's definitely a fantastic thing that we have each other. I mean, of course, we are friends, but in conjunction working with each other, we are a great team for sure.
Yeah, and I think like a really important takeaway from what you said there is that people are often in a rush to get things done, but not every situation can be done very quickly, and sometimes it's a multi-step, multifaceted process, and that may include filing that proposal. It may include filing or getting that mortgage 6, 8 months later. But having goals and setting a timeline for yourself that's realistic is really important for people that have struggled with their finances in the past. Canadians are very, very lucky with the equity they've built in their homes. Let's not, rush to spend it all so fast, but to look at, our lifestyles and things like that. And your background and your career, gives a lot of value there in what you can help people look at as far as like the long-term future. Because a lot of times we meet mortgage brokers, or they call us, and they're just trying to rush the file out so they can get their commission and move on. And from my experience, that's not the case with you. You're really looking at the broad picture, which is what our clients really need. So I do really respect and appreciate that.
Thank you.
Is there anything else you'd like to add before I sort of wrap things up, or any questions for me specifically?
No questions for you, realistically. I just going to circle back to essentially what you just said. I always tell my clients that, you can't get rid of me that easily. I'm still going to be calling you and checking up on you and making sure that you're practicing good financial health. And because I do have the background in working with people who have filed insolvencies, I really understand the steps that are required to get you back in that position of being a prime candidate for financing. And sometimes, exactly like you said, people are in a rush to do it, but it's not always the case. Sometimes we have to, consolidate everything, pay out that proposal, go into a private solution, and people are like, oh, I don't really want a second mortgage with a higher interest rate or whatever that may be. But that's the first step, right? And I always tell my clients, like, okay, so maybe the first step was going into the proposal. Now your second step is consolidating and getting into a private solution or an alternative solution. And then your next step would end up being either an alternative solution, or hopefully by that time you're a prime client again. And I think that with my background, I really understand what it takes to get there. So while it isn't an immediate process, obviously getting back on your feet, you do put one foot in front of the other to eventually get there. So yes.
Awesome. Yeah, so I think our biggest takeaway here is that our clients should not be scared to ask those questions, should not be scared to set an overview timeline with a professional like yourself or myself that's realistic, and to set goals that make sense for themselves and their families, and to ensure their futures, right?
Exactly.
Awesome. Well, thank you so much for joining me. For anyone that's watching or listening, we're going to put Tina's contact information both in the description as well as on a little splash screen here in a second. And you can always reach out to Tina or myself if you have any questions. We're always available for you, and consultations are always free. So don't be shy. Thank you so much for joining us, and don't forget to subscribe.
Thank you.